New data shows inflation is ticking up, but not as high as economists expected. Prices increased 2.7% compared to a year ago, slightly less than expected, and prices are up 0.2% month over month. That's the highest inflation has risen in 6 months. Let's bring in ABC News business reporter Alexis Christoforous for more on that. So, Alexis, on the one hand, better than expected. On the other hand, the highest increase in 6 months. So what do you make of that?
Well, for the second month in a row, Diane, we're seeing the White House tariffs seep further into the economy and winding up on store shelves for a number of different consumer goods. As you mentioned, though, those price hikes not quite as robust as many economists had expected. And in fact, we did see a number of items actually come down in price last month. So let's break this down for you. Tariff-sensitive categories, things like sporting goods, toys, furniture, they did see price increases, though not the pace of those price increases were not as quick as we saw in the month of June. One of the key drivers of inflation we know for years now has been housing costs. Rent, once again, up 0.2% last month. So housing costs continuing to move up. We did see a decline, though, in hotel prices, Diane. And another quick of some other things that caught my eye. Not only did rent prices go up, eating out at restaurants got a little more expensive. New and used cars and trucks and airfares saw a big increase. On the downside, gasoline, we continue to get a break at the pump. Those prices are lower year over year and month over month. Food at the grocery store also just a tiny bit lower, Diane.
Alexis, President Trump just extended a pause on tariffs against China for another 90 days. What are you watching for there?
We're watching for more deals. A deal with China would certainly, ease investors' concerns about the impact these tariffs will have on inflation. We know we have a trade deal with the European Union, with Japan. So more and more economists are of the belief that even if these tariffs do take effect, they won't be as robust as first thought, and that these deals that the president is cutting with other countries will really tamp down whatever impact they're going to have on inflation. That's why a lot of economists are betting that the Fed's going to cut interest rates 3 times this year, beginning at that September meeting. It's a reason why we're seeing stocks rally today. The Fed not only worried about inflation, which seems to be, pretty tame, but now they're concerned about a job market that looks like it's weakening. We got that jobs report last month with a big revision downward for the prior 2 months. And that seems to be where the Fed's focus may be in the next few months, Diane.
All right, business reporter Alexis Christoforous, thank you.